Most people talk about passive income, but almost nobody actually shows you the real numbers. So in this video, I'm breaking down exactly what my portfolio paid me in March, dollar for dollar, week by week. No projections, no estimates, no hypotheticals. This is real cash hitting the account. So stay tuned. Welcome back to Simply Money. If you've ever wondered what an income-focused portfolio actually produces in real life, this is it. I'm going to walk you through my full March income, break down where the money came from, which funds carried the load, and which ones didn't. Because here's the reality. Not all income is created equal. Some of it looks great on the surface, but comes at a cost underneath. We're not just looking at what got paid. We're looking at what actually matters. Sustainability, consistency, and what this means going forward. And stick around because at the end, I'm going to show you what this portfolio is actually on pace to generate monthly and whether it's enough to realistically live on. Let's dive into some of the worksheets. All right, for those who are new to the channel, welcome. Thank you for joining us here at Simply Money. What I do on this monthly update is I show my income portfolio and what positions I have and how it's done through the course of the time I've owned it. Then I break it down and show you each week's distributions, what everything paid week over week, and then I'll show you a snapshot of the overall month portfolio, where it's been in the past and where it's projected to go in the future. So stay tuned. There's a lot of information on these updates, and we're going to start with a fan favorite, SCHD. For those who are familiar with the channel, you know back in 2017 is when we bought into that. This was our starting amount at $200,000. This is all post-split adjusted for those who are wondering. It was able to get us the 13,245 shares, and it has been a great producer for us. As you look down on these charts, if you're new to the channel, what I'll have is the date where the distribution was given. Obviously here we put in as a transaction as a dividend, the dividend per share, and then how much it paid based on how many shares we have. And this will be the same for all the different tickers we're going to look at. Then here we have the share price at the time of the distribution when we reinvested. Here in this column, you can see how many shares we were able to buy as we had it on full drip, and we continue to fully drip on these. Here in column H, you have our cumulative shares. So as we're adding more shares each quarter, when we get this distribution, we add it in. And so this is running tally of how many shares we have, and then what the portfolio balance is based on the number of shares and the share price at the time. I want to take you down a couple things. Over here, we just have, I do my annual dividend, the annual dividend growth, and then my yield on cost on this one. I don't do that with all my funds, but I do that with SCHD. Now, I want to show you this one a little bit more in depth because SCHD has had a slow couple years. But I want you to look back, and this is only from 2017 when I bought into it. It's not looking back at inception. If you take it from inception, it's done extremely well, but it's even done well, in my opinion, from this time frame. You can see the distributions. We've been seeing that growing year over year, and that's one of the good things about SCHD. It has a strong dividend CAGR. The dividend is growing year over year. Sometimes one quarter to the next, it might be slightly lower, but if you look at the full year over year, it's been growing every year. And we'll look over here at the annual dividend growth. You can see it was 7%, almost 20%, 17.5%, 11%, almost 14%. The worst year it had was right here, 3.77%. And then we had a 12.23%, and then a 5.25%. As we come down to the latest distribution here in the end of March of 2026, you can see that we had a 0.2569 cent distribution, which is down from December, and that's where you have to watch that and say, oh, well, it's down. But if you look at the prior March, right here, it was 24.88. So it's up from last March. As you can see, March, and then you come into June, it was 26, and then September it was 26 cents, and then December it was almost 28 cents. So we're looking at March over March. It is up, and we'll see as we continue to go through the year and get the next payments if it continues to go up year over year, which I feel very confident it will. Brings us down here, our total gain in share value, and this is unrealized gain. We haven't sold these, is $163,000. You do see here I did some rebalancing of this fund, so you can see some shares that were sold off, and this was just for rebalancing our portfolio because we don't want to get too heavy. It's still very heavy in SCHD. Taking those out with what we're still holding, we're still up $160, almost $163,000. And we're going to look at that a little bit more in depth and what these each paid. But I wanted to give you a breakdown of how this works as we're following that. Now, I want to stop here because this is a great time to realize we spend a lot of time trying to build our wealth. But we have a sponsor, and I want you to listen very quickly, just 35, 40 seconds of the sponsor and what it can do for you. Let's take a quick pause to have a word from our sponsor, Nord Protect. Because one of the fastest ways people lose money today isn't bad investing. It's getting their identity stolen. We're talking credit fraud, fake accounts, money disappearing, and most people don't even know it's happening until it's too late. That's why I want to show you something I actually think matters, Nord Protect. Here's what it does. It gives you real-time alerts if something changes with your credit or if someone tries to open an account in your name. It's also scanning the dark web 24/7. So if your email, social security number, credit card number gets leaked, you'll know immediately, not months later. And this is the big one. If something actually goes wrong, you're not on your own. They offer identity restoration support and up to $1 million in recovery coverage, plus protection for things like online fraud and even cyber extortion. So think about it like this. We spend all this time trying to grow our money, but almost nobody is protecting it at this level. If you want to check it out, I've got a link in the description. Now let's get back to the numbers. All right, welcome back. So now let's go to our next fund. We have WPAY, WPAY from Round Hill, which is now, for those that don't know, is now called TOPW, TOPW. They have changed their ticker symbol, and they've changed a little bit of how they operate. So if you want to look into that a little bit more, we can maybe do a video on that and what some of those changes are. But TOPW now is WPAY for those that are unaware of that. You can see here, this has not been a great fund. Bought into that. We had distributions are slowly going down. The share price has plummeted almost 35%. Because we're fully dripping, we're only down about 2,600 on this. So it's not horrible overall, but holding it since September, it's not a great return when you're negative. But we'll wait and see what happens over time. Right now, the Magnificent Seven is being drawn down quite a bit, so this is going to impact this even more. And we'll see how it recovers when that time comes when the Magnificent Seven starts going back up. So that's WPAY. Then we have one of my favorites, one of the few yield maxes that I'm still very bullish on, and that's CHPY, CHPY. And see here that the distributions were pretty steady. We did have mid-March a slight pullback on that, but then this most recent is back up to 49 cents. That is nice. We don't have the close prices of right now. Their market is actually closing here, so this will update shortly. And this has been going down, as you can see, in end of January, it hit its peak here at 61.50, and it's bounced around a little bit, and then March has been tough for everything. There's no two ways around it. March has been tough in the market, and so I don't let that bother me. It's down from where it was at its high. The share price is still up 1.5%, almost 2%, from back in September. So it's still growing, and that's after a pullback. It was doing really good right up until the end of January. Again, I'm not worried about that. I feel very bullish with this one. And you can see just as of a week ago, and we'll see what this does after it updates, we're up about 3,400 on this small fund here. That is CHPY. And we're going to look, hang on there, because we're going to look here in a minute after I go through these real quick. We're going to look at each one of these and how much they've paid for the month and the week over week and how that's working out. But IWMI, this is our small cap covered call ETF that we have. Here we are looking at the distributions have been very consistent, paying out. We're up about $500 on there. We just have a small position with this, just diversifying a little bit, and we'll be adding a little bit to this each and every month as we continue dripping into that. But this has done well, and long term, I see this being a good fund to help diversify our portfolio. YBTC, as anything crypto, has been taking a hit. This is the fourth time, if you look at Bitcoin, that they've had huge pullbacks. There's been three others that were all about 80%, give or take, pullbacks. And then, of course, everyone panics when it drops, and then it just skyrockets. I think this is just another resetting, kind of regathering, and it'll do that. It's down about 46% Bitcoin, somewhere in there, from its high. And so it could have quite a bit further to go, but I am hanging on because I just feel that cycle is going to go and then it's going to go back up. So I'm just dollar cost averaging as it's coming down, and we'll see what happens. And maybe not. Maybe I'll be wrong. But we're still getting that consistent payment and dripping in there, gathering shares while it's on sale. Same with blocks, another small position with this. And you can see the distributions have come down a little bit from 13, 14 cents. Now they're in the 10, 11 cents as the share prices dropped quite a bit as well. And we're going to continue to watch that. But again, I think with crypto, all things, you're going to see that rebound and that come back up. Now we have QQQI, another monthly payer, very consistent monthly payer. We're going to see what happens as the market drops and as it recovers. How does QQQI respond in the rebound? And that'll be interesting to watch. Distribution started out when I got it 64 cents, 63 cents. It was pretty consistent. Right now we're at 61 cents per share. Share price is down about 4.5% since July, but it's been very consistent. It's, again, pulled back a little bit with the full market, especially with tech taking a pretty good hit right now. And we'll see what happens as that, again, recovers. We're up about 1,000 on that. Nothing spectacular at this point, but we are continuing to pile in the shares. As you can see, our cumulative shares, now we're up to 1,229 on that. Brings us over to SPYI, this is S&P 500 covered calls. Again, you can see very consistent with 53 cents, 52 cents. This latest distribution of 51 cents, so it's been very consistent. We're just adding more shares by dripping it in. The share price, again, was maintaining pretty flat and then has this pullback of March, and it's caused a slight drop in there, but we're still in the green on this, about $2,000 as we continue to pile on the shares, and we'll see what happens with this one as well with the recovery of the pullback. We don't know how long this is going to last. The market is very tumultuous right now with all the news and everything going on in the world. Now, the ULTY experiment, for those watching the channel, seeing this since July, we bought into this, watching this, we're riding this one out, just seeing what happens. This is going to be held, I've made a decision, till at least July. We'll have 1 year. We'll see how it does. And at that point, I'll make a decision where we're going to go with this. As you can see, I had a pretty bad year. There's a lot of changes been going on with it. They tried several different things. They went from monthly to weekly paying. They changed their underlying funds. They've just done a lot of stuff trying to tweak it. And as of right now, it has stabilized a little bit. As you can see, the share price is still declining, but not as rapidly as it was. Again, I'm not super concerned about March because March has been pulling back for everything. But if you look in February and January, it was about $37 and $34, $35 started climbing a little bit. And then March hit and everything went wonky. Right now we're down to $31.68. And we'll see what happens. Obviously, it's just been very rough on ULTY. What are your thoughts with ULTY? Have you abandoned it? Those who have watched the channel, you know that I did this, and we're going to ride this for 1 year at least and see what happens. And we'll continue to monitor it. But I'm curious on your thoughts with ULTY. Don't forget to leave those in the comments down below. All right, so that brings us over here to the summary of this. This is the projections from what we actually have. And I'll show you here in a minute the actual real payments each week. But right here is just a summary chart of what we just showed you. This shows you each fund, and this shows you the number of shares and the current share price, and then what, based on either the trailing 12 months for SCHD or the other funds, I try to use the average of what it's been. And if it's declining, I take that decline in consideration. So if it's declining by 2%, what it's paying today isn't going to be what it pays in 12 months. So I try to factor that in the best I can. Some of these are short funds. We don't have a ton of data. So this is just projections of what annually we would be getting, about almost $72,000. This is the monthly, just under $6,000, and the portfolio balance. And this is what's currently there. This is, as of today, what is actually happening, and this is the percentage of the portfolio. And as you can see right here, SCHD is very heavy in the income portion of my portfolio. When I first started, I had a very heavy concentration with SCHG, which is in my growth portfolio, and SCHD in my income portfolio. And over the last couple of years, there's been some slight changes. We're trimming this position slightly. We're dollar cost averaging into some of these others, building them up, and we're just going to continue to watch and see what happens with that. So that is the portfolio of the income portion, what's happening. Now let's go to what you've been waiting for. Let's see what it actually paid. And so over here, and if you like this chart here, if you like this dividend growth, this is the one I use, but I have one on the Buy Me a Coffee link down below in the description. You can get a dividend growth Simply Money chart where you put in up to, I believe it's 10 tickers that you can choose. And all you have to do is on this chart is you put in the ticker symbols here, and it'll update all of these with the chart for you. And then you just can track your own portfolio. So you could put in the date you started, what you started with for each of these funds, and you'll have a little summary sheet there. So that is available. Now this one here, this one is not available. This is what I use, and just sharing this for the videos to see what it pays. So here we have the date and the symbol and how much it paid for that day. And so I have the entire month here, and then here you have each week's payment. Throughout the week, you can look at the beginning of March, you're getting these payments of $32, $278. By the end of the week, you've been paid almost $800. And that's just passive income. I haven't had to do anything. Once I've set it up, I've invested. Now, this isn't passive income in the sense of I don't have to do anything to begin with. I had to invest to begin with, but now it's passive. I don't have to do anything. I can go on vacation. I can be sleeping, and these things hit my bank account each and every day and each and every week. You can see each of the funds, what they paid, ULTY at $278, WPAY or TOPW now at just under 100, JEPQ at 90, GPIQ and GPIX are two new positions I've used to diversify a little bit. I've added those just recently. And then we have CHPY at 215. As you come down, I want to show you a couple. You have your monthly payers. You have QQQI at 789. You have SPYI at 619. IWMI at 107. So those are the three monthly payers. And those only pay once a month. The rest are paying each week. As you can see, these payments. So the second week, we got $643. The third week, we got $2,134 because we got all of these payments. And then we have this week, and now blocks is the only one because that comes out the end of the month. The 30th will be the last payment. We can just assume it's going to be about $31, give or take. That's what it's been consistently. We'll add $30 to this once that comes out. But you can see we had our quarterly payer, which is always fun when you get the quarterly payer. And you see, nice weekly pay, nice weekly pay. And then you have your monthly pay, and that's really nice. It's a nice third week paycheck of $2,100. And you have your fourth week here. And the last part of that fourth week coming in brings our total, look at this, our total to $7,250 for the month. And you can come down here and see each of the tickers and the total amount for that ticker. So it just adds it up. So you can see it individually day by day. You can see your weekly amount. You can see the total for the month. And then you have the amount here being paid out by each ticker for the month. And that brings us over here to our cumulative. And this is what I wanted to show you. This was last year before we made the move in July to start focusing on this a little bit more. You can see our non-quarterly payments. We have our quarterly payment here with SCHD, and you have one here. But between those, we had nothing coming in hardly. For the month, 655, 646. But then when July came, we started boosting that, and then August, and now you can see our quarterly payments have gone up. December was phenomenal, 76.58. This quarter's down slightly. I'm still very happy with 72.50. Considering everything's pulled back a little bit, we're still in a very healthy place. But look at our in-between months. Those are up as well. Look how much higher we are now. Instead of getting a $5,000 payment and then next month $800, now we get a $7,600 and a $5,200 and a $4,100 and now a $7,200. Makes for that income for living on, which we're preparing for in the near future. This is what this is for. Instead of having, I get this big paycheck and then I have to just balance that through the year, this is driving that income up. And you can see for last year, for the whole year, it was $40,217. Still very good. I'm happy with that. But for retirement and living on, already we're at almost $17,000. You can see the difference here. The average last year was $3,300 a month, $3,351. So far this year, and it's only 3 months, but you can see the trajectory is going up from each month and each quarter. We're now averaging $5,500 a month. So, that's a nice paycheck each month, $5,551. And our goal is to get that high enough to where we don't need all of that. Like right now, I don't need all of that. My budget is below that. I know some people I work with, they live in California or they have a higher expense lifestyle. We have no debt. And for us, we can live way under this. And so we could take this and then reinvest some of it to continue to grow that. But our goal is to get this to where we're not using more than 50% of it. We're just not ready for our own personal reasons. But this is what we're looking at, and we're going to continue to project that. In a couple years, you look at that, and we're probably going to be averaging close to $7,000 a month with this portfolio. But that is what we have. This is what it's shown. This is showing each and every month's pay. What are your thoughts? This is what income looks like in real life. Not perfect, not smooth, but predictable enough to build a plan around. The question isn't just how much it pays, it's whether it can keep paying. So what are your thoughts? Leave it down below. Let me know. Did you like seeing this? Is there anything you'd like to see different? I appreciate your support. I appreciate your being with us, and we'll see you next time on Simply Money.